who could be the winners and losers of the COVID-19 crisis. Which countries would investors and markets focus on in the aftermath of the pandemic?
Joining me on stage, the moderator of the session, Mr. Barnabás Virág, Deputy Governor of Magyar Nemzeti Bank. Mr. Virág is responsible for monetary policy and financial stability. Prior to his appointment as Deputy Governor, he served as Executive Director of the MNB, responsible for monetary policy and economic analysis. As a recognition of his outstanding contribution in the fields of economics and finance, he was the recipient of the Popovich Award in 2017. He has authored and edited several books. His latest work is titled Long-Term Sustainable Economics, and it discusses the main determinants of a sustainable future in these life-changing times, a question very much relevant for the upcoming session as well. Deputy Governor, welcome on the stage. We're really happy to have you here. In the recent months, we've heard many times that the COVID-19 is a game changer in terms of how we think about economy, sustainability, and money. What do you think?
First of all, it's a pleasure to be here. And turning to your question, for sure. So it's not a question that the COVID-19 was a game changer in the current year. So many, I can say, tectonic changes accelerated and emerged in the current year. So it's first to look at, we use the digital payments in our daily life. We order more and more products from the digital marketplaces. I think many people pay more attention nowadays to the sustainability issues, to the vulnerability issues in terms of the health or the climate changes in our life. So it's not a question that the COVID-19 was a game changer in the current year, and of course a game changer for the policymakers as well. So I think we need a brand new macro policy in the future. We have to find the right balance and the right cooperation between the fiscal policy, the monetary policy, and the structural policy. So that's the task nowadays for the policymakers. And I hope that we will be able to find the right answers for these challenges. But of course, the future will tell the truth, how successful we will be or not.
Thank you very, very much. This is something definitely worth discussing further, so I give the floor to you and the participants of the second session.
Okay, thank you very much. And first of all, I would like to also welcome our audience. And I also would like to welcome our distinguished speakers. So I think we have two excellent keynote speakers and four well-known panelists in this very important topic. So I think in 1 hour we will know more about the right answers to the current challenges emerged from this very severe COVID-19 situation. So I would like to start to introduce our first keynote speaker, who is Mr. Kyuil CHUNG. Mr. Kyuil CHUNG is the Deputy Governor at the Bank of Korea. Since joining the bank more than 30 years ago, he has held various leadership positions. As an experienced researcher, he has written numerous papers focused on international capital flows, monetary policy, and the world's financial system today. He will also shed light on the Korean New Deal, a new strategy for a sustainable future. So now I would like to ask Mr. CHUNG to hold your keynote speak in the next section. The floor is yours.
Korean New Deal currently being pursued by our government. As Korea transitions into a mature economy, the trend of growth is slowing. GDP growth declined from an annual average of 6.9% in the 1990s to 4.4% in the 2000s and to 2.9% in the 2010s. This is mainly owing to a decline in potential growth due to not only slower increases in labor and capital inputs, but also stagnated productivity growth. And given that the trend of investment is slowing due to the maturity of major industries, the rapid decrease in the working age population, and heightened uncertainties, potential growth is forecast to decline further in the future. As the Korean economy's growth rate declines, income inequality has deepened. The income quintile share ratio rose from an annual average of 3.86 in the 1990s to 4.52 in the 2000s and to 4.57 in the 2010s. As a global phenomenon, worsening income distribution has been attributed to skill-biased technical change and to intensified global competition with low-skilled laborers in emerging economies. In Korea, income distribution has worsened due to the expanded hiring of non-regular workers who make less money than their regular counterparts. As part of efforts to enhance labor market flexibility in the wake of the Asian financial crisis, population aging has played a role as well. This year, as individual countries have implemented strict lockdowns to cope with the COVID-19, the world economy is faced with the worst economic recession and employment shock since the Great Depression. Difficulties in the Korean economy are also increasing, although the shock has been minimized thanks to the successful implementation of quarantine measures. Without active efforts to protect jobs and support domestic demand, we could see a vicious cycle of declining income, shrinking demand, and large-scale unemployment. The COVID-19 situation is likely to go beyond a simple economic recession and bring about massive changes in the overall economic and social structure. The transition to the digital economy, emphasizing non-face-to-face industries, will gather pace, and we will see growing awareness of and consensus about the green economy. These shifts will boost jobs in new technologies and new industries, and jobs will also take different forms, such as platform work and crowd work. However, these trends will also weigh on income distribution, as they will be accompanied by job market mismatches and decreased demand for low-skilled laborers. Seeing that a country's international and economic standing after the coronavirus will depend on rapid relief and recovery from the shocks and on swift reform, the Korean government decided to put forward the Korean New Deal. This is a national development strategy for Korea to overcome the current crisis and become a leader in the post-COVID-19 global economy. The visions of the Korean New Deal are to transform Korea from a fast follower to a first mover, from a carbon-dependent economy to a low-carbon economy, and from an unequal society to an inclusive society. To achieve these goals, the government will aggressively push ahead with the two main components of the new initiative, the Digital New Deal and the Green New Deal, while bolstering social safety net as a backstop. I will first speak about the Digital New Deal. COVID-19 brought about a sea change in economic and social structures by accelerating the transition to digitization and non-face-to-face activity. This has highlighted the importance of building competence in digital technology. The non-face-to-face digital world, where you shop online and work remotely, has already taken deep root in our lives. Education and healthcare are also carried out remotely. Data has become a source of competitiveness. In the future, jobs will be created in new industries where artificial intelligence and networks are integrated. Korea is already a front runner in the digital sector. It was the first country to commercialize 5G network in April 2019 and is home to excellent infrastructure, with 92% of the population using the internet and smartphones. However, the low utilization of cloud and big data by Korean companies is a weak spot. Market domination by global IT giant potentially threatens our goal of becoming a leader in the digital economy. By making bolder and more preemptive investment, Korea will pursue digitalization in society, the economy, education, industry, and medicine in an effort to become the world digital leader. In order to accelerate the transition towards a digital economy, the government will establish digital infrastructure nationwide, which will be used for the provision of non-face-to-face medical treatment, a learning environment that incorporates a blend of both online and offline methods, and the simulation-based land and facilities management. I will now turn to the Green New Deal. The outbreak of COVID-19 has highlighted the importance of the fight against climate change and the shift towards a low-carbon economy. The economic risks from the pandemic have shed a light on the need for a national development strategy that ensures sustainability, including environmental and ecological protection. According to the World Economic Forum's Global Risk Report 2020, the top 5 risks we will face in the 2020s are all environmental issues. Korea is still mostly powered by coal plants. Our greenhouse gas emissions have steadily increased, and our industrial structure remains carbon dependent. The Green New Deal aims to improve people's quality of life and achieve sustainable growth by coping with the climate crisis preemptively. The Korean government is currently working on an energy conversion policy and an emission trading scheme in order to reduce the emission of greenhouse gases in accordance with the Paris Agreement. The Green New Deal has also aims to further increase investment and support for the environment and energy sectors in order to implement the greenhouse gas reduction plan on schedule and move towards a net zero society. By doing so, we will be able to make our industries more competitive and create a large number of jobs under the ever-strengthening global environmental regulations. Last but not least, I would like to talk about strengthening social safety nets. Eliminating inequality and transitioning to an inclusive society are prerequisites for Korea to achieve a great transformation. Korea has been able to minimize the COVID-19 employment shock thanks to successful disease prevention and control. Nevertheless, the COVID-19 crisis has shown a light on the weakness of our social safety nets, since Korea has a high proportion of non-regular workers, and only half of the total workforce is covered by employment insurance. Times of crisis exact a heavy toll on temporary workers and day laborers. Contrary to the fixed idea that a crisis worsens inequality, the Korean government intends to seize the crisis as an opportunity to strengthen social safety nets and reduce inequality. The government plans to improve employment and social safety nets, such as employment insurance and the National Basic Livelihood Security Program, in order to protect the vulnerable from employment shocks and eliminate blind spots. Our government will also nurture essential human resources in the fields of AI and software to keep pace with structural changes in the future job market, thereby facilitating migration toward new jobs. Let me now turn to implementation strategies for the Korean New Deal. The Korean government will improve systems in tandem with fiscal investment in order to encourage large-scale follow-up investment from the private sector. It will inject $100 billion by 2025 in phases, amounting to 6% of annual GDP. By sector, the government will invest $40 billion in the Digital New Deal, $37 billion in the Green New Deal, and $23 billion in strengthening safety nets, serving as a priming measure to create new markets and drive private demand. Including private and local government funds, a total of $140 billion will be injected as part of the initiative. In addition, the government will continuously work to establish the institutional foundation and improve regulations for transitioning to a digital and green economy. This will act as a catalyst to facilitate private sector innovation and investment. The Digital New Deal will boost economic dynamism amid a declining potential growth rate. The Green New Deal, meanwhile, will accelerate our transition toward a low-carbon nation with the spread of sustainable new energy. Through enhanced safety net, Korea will transform from an unequal society to an inclusive society and strengthen the economic resilience against the COVID-19 crisis. The government forecasted that the Korean New Deal will create 1.9 million jobs. However, concerns have been voiced as well about the fiscal burden imposed by the Korean New Deal, which will amount to $100 billion in government expenditures by 2025. In order to achieve the initiative's objectives and put those concerns to rest, the anticipated effects of each project must be thoroughly analyzed. Projects with large expected effects should be prioritized, and the disbursement process should be carefully reviewed to avoid moral hazard. Lastly, I would like to talk about the Bank of Korea's role in the transition to the digital and green economy. First, in terms of the transition to the digital economy, the Bank of Korea has been working to establish a pilot system to test central bank digital currency in response to the trend of currency digitalization. Central banks need to respond more actively to the wider use of digital currencies in the private sector. We look forward to building a more efficient and safe financial system through both cooperative and competitive efforts among central banks and the private sector to achieve financial innovation. The Bank of Korea has also strengthened its monitoring of fintech companies at home and abroad. Korean fintech companies have shown rapid growth in the area of payment and settlement, and are making inroads into diverse financial services, such as securities and insurance. Fintech companies will continue to grow in the future. However, with their high dependence on IT, these firms are vulnerable to cyber and operational risks. Moreover, while competition between fintech companies and financial institutions can spur innovation, it could also encourage greater risk-taking by financial institutions. Therefore, the Bank of Korea plans to issue an early warning about potential risks related to the fintech industry and devise response measures if needed in cooperation with the government. Lastly, the Bank of Korea is paying attention to financial stability risks related to the shift to the green economy. We are mindful of the possibility that enhanced regulation of greenhouse gas emissions may act as a financial stability risk by, for example, worsening the loan quality of financial institutions with a high exposure to vulnerable sectors. While referring to the climate change scenarios of the NGFS, the Bank of Korea plans to conduct stress tests of the impacts of the shift to the low-carbon economy on the financial system. The global economy has developed by overcoming a variety of economic and non-economic crises in the past, and there is no doubt that we will overcome COVID-19 as well. We should take this crisis as an opportunity and as a starting point for leaping into a new future. Now, let me stop here. Thank you.
Deputy Governor, thank you very much for your excellent speech. So I can say that in the last decade, Hungary, and I think it's also true for the whole Central European region, was I can say, one of the engine of the economic growth within the European Union. But the basic question remained the same for us, how our country and how our region can be a successful catching up economy in a midterm. And I can say that nowadays and in the last years, we look at quite carefully those miracles which occurred in South Korea in the last decades. And in line with that, I think we will be able to benefit a lot from your talks and from your current speech about the Korean New Deal. So let me raise two questions regarding your speech. You mentioned that one of the key words of nowadays is the untapped or touchless economy. So as it's called, contactless digital services that include fintech, e-commerce, and so on, has become a key growth sector in South Korea during the COVID-19 crisis. And the program has the potential to become a blueprint for successful post-COVID recovery. So my first question is linked to the relationship between the digitalization and the labor market. So I would like to ask, do you think the digitalization can be an effective way to tackle youth unemployment elsewhere in the world? And what can be the consequences of the current digitalization trend for the labor market in our world?
How digitization have an impact on youth employment? If technological progress is complementary to the skills of young workers, compared to the existing middle-aged workers, the labor demand for young people may increase. Generally speaking, young workers have a comparative advantage in their ability to use IT products. So I think it is important to strengthen investment in human capital so that young workers can keep pace with technological progress. Thank you.
Okay, thank you. So my second question is linked to the financing side of the current challenges. So I think behind the South Korean miracle, one of the main area was in the last decades is the financing and the financial sector. So you mentioned in your speech that we need many new investments in the green area, new investments in digitalization. So my question is, how would you finance these investments in the coming years?
As I mentioned in my speech, funding is the key issue for the success of the Korean New Deal project. As you may guess, public sector capital is not good enough to cover the whole fund. So encouraging private sector investment is very important. So our Korean New Deal Fund is made up of 3 pillars. Let me introduce those 3 pillars. First one is public sector-led New Deal Fund. In this scheme, the government and the policy banks provide a certain amount of money to the fund. And another money will be raised through matching fund between public and private sector investment. The second one is New Deal Associate Investment Funds. This is composed of a public sector-led New Deal Fund and private sector infrastructure funds. In this scheme, tax incentives and fiscal support will be provided to facilitate private sector investment in Korean New Deal project. And the last one is a private sector New Deal fund. The basic plan of this fund is to encourage private sector financial institutions to search for promising New Deal investment projects by improving regulation and institutional foundation. So our government hope these 3 pillars work well.
Okay, I understand.
Thank you.
I understand. Mr. Chung, thank you very much for your speech and for your talks. I think we will benefit a lot from this talks, and I can say that we wish you great successes in this new Korean New Deal program, and we will closely monitor your new achievements from here, from Central Europe. Thank you very much.
Thank you very much.
Okay, now I would like to turn to our second keynote speakers, who is coming from China. Ms. ZHANG is a Director General of the Department of Foreign Economic Relations at the Development Research Center of the State Council of China. Previously, she represented the Development Research Center at the OECD, and she was also a visiting fellow at Harvard Kennedy School. With many years of experience, she can provide us with first-hand insights into the Chinese economy and beyond. The floor is yours, Ms. ZHANG.
Dear Chairman, Distinguished guests, good morning. It's my great honor to participate in this forum. Last year, I accompanied the head of DRC to visit Hungary and experienced the beauty and heritage of Budapest. Amid sustained pandemic of coronavirus, international travel may seem still distant. Therefore, I feel fortunate that I was able to visit Hungary last year and fully appreciate the National Bank of Hungary for organizing today's video forum. Under the theme of this panel, my topic is enhancing Euro-Asian cooperation, adding stable factors to a world of uncertainty. I would like to share 3 observations. The first, the pandemic is reordering the world, which fueled uncertainties and brought unprecedented challenges. I feel that the world economy and international environment has indeed been volatile like a roller coaster in the past few years. Back in 2017, the world economy growth exceeded expectations, achieving the first broad-based growth since the international financial crisis. However, in the following couple of years, escalating trade frictions, geopolitical conflicts, and other risk factors reinforced each other, imposing a hard braking to the world economy. I remember that last year the World Bank said the world economy is entering a black decade. But unfortunately, that was not the bottom. This year, the pandemic and great lockdown struck the world with huge shocks on trade and investment activities, as well as on the effective functioning of the global value chain. It is worth noting that because of such fluctuations, countries are not only overwhelmed by dealing with current crisis, but also too busy to address structural problems that are unresolved for a long time. Furthermore, the world economy has ended the period of super-globalization, entering into a so-called slowbalization, while deglobalization is on the rise, and some countries have taken unilateral measures and even extended the reach of their domestic laws overseas. All of this have created huge challenges for international coordination of macroeconomic policies and multilateral trading regime. The second observation I would like to share is that besides the dangers, we need to notice precious opportunities in such a difficult time. First, the digital economy will grow faster globally. The new generation of technological revolution accelerates industrial transformation and the integration between manufacturing and services has become a new driver of the world economy. The digital transformation is enabling new economy, new forms of business, new models to prosper. According to the latest World Trade Report by WTO, given the potential effects of ICT penetration, the global export of trade in services through cross-border supply more than doubled, and the share of trade in services in global trade is expected to increase from the present 24% to about 50% in the year 2040. The total output value of global digital economy may rapidly expanded to about $23 trillion in the year 2025. In particular, SMEs will have easier access to regional or international production to integrate into economic globalization. Second opportunity is opening up has created new momentum for development. While while global cross-border investment is suffering a major setback, about 40% decrease this year, foreign investment attracted by China has grown against the trend. FDI to China in RMB in the first 9 months grew by 5.2%. This is firstly because of China's success in controlling the virus and leads the way in economic recovery. But more importantly, I think, is that China upholds the basic state policy of opening up to boosting higher quality of opening up or even opening up on its own initiative by taking a series of measures to improve the business environment. For example, continue to reduce the nationwide negative list, lowering the market entry threshold, implementing the foreign investment law, and issuing the revised patent law last week. According to a business confidence survey by the EU Chamber of Commerce in China, about 30% of the respondents believe that they are more welcome in China than before. So according to the predictions by World Bank and IMF, China will be the only major economy to post positive growth this year. About 2% growth will offer important support to global economic recovery. I think a more open and prosperous China that embraces cooperation and win-win concepts is bound to create more business opportunities for Eurasia and countries around the world. Third, there are increasing demands for international cooperation. The trend of deepening globalization will not change fundamentally. The pandemic will not end globalization, but reshape the globalization. For example, countries are paying more attention to the security issues rather than the efficiency in building up industrial chains. According to IMF forecast, the world economy is in deep recession this year, while the forecast of minus 4.4 growth is about 0.8 percentage point higher than the June forecast. In order to avoid damaging the hard-earned trend of recovery, enhancing cooperation and working together to address global challenges would be the only choice. There is a more urgent need than ever to renew the architecture of international cooperation and confidence. My third observation is the real differences exist while closer Eurasia cooperation is significant and promising. For example, China-EU has close economic and industrial relations, and for years trade and investment activities and cooperations have achieved significant progress. EU's investment to China continues to grow from about $4 billion US dollars per year to about $8 to $9 billion US dollars now. China's Railway Express continues to beat its monthly record this year, with a year-on-year growth of 46% in the first 3 quarters, and over 90% of the heavy containers on the return trip. In a series of high-level dialogue and summit meeting this year, EU and China further confirmed that the consensus of opposing protectionism and unilateralism, which sent clear signal in supporting free trade and globalization to the world. In the future, I think the intensified bilateral cooperation will generate important factors of stabilities for both sides and the world. In the newly issued The Economist, it is said that the world is adjusting to the unprecedented challenge rather than trying to restore yesterday's economy. governments must reshape or adapt to change. I fully agree with it. The right thing to do now is to strengthen international cooperation and share responsibilities to participate in global efforts in dealing with even more difficult time. At present, Asia is the most dynamic region with great potential for growth, while EU has advanced technologies and matured management systems. The complementary Asia and EU economies have the common pursuit and aspiration of open development and safeguarding the rule-based multilateralism. Under the new situation, Eurasia countries should work together to build an open world economy and promote policy coordination and a mutual beneficial and win-win principle. We should actively support new forms of open and inclusive regional economic cooperation, and we should further open up markets to each other and provide level playing field for enterprises on both sides and jointly safeguard the industrial chains and supply chains. Furthermore, we should enhance cooperation, seek shared interests in digital economy, green development, and other emerging industries. Finally, I would like to thank the Hungarian organizers again for hosting this forum. Through today's exchanges and dialogue, I hope that we can enhance mutual understanding with each other and the confidence in the future cooperation, work together for enhancing new dynamics to world economic recovery. Thank you. All the best to all of you.
Ms. Chang, thank you very much for your excellent speech and for the deep talks we got from you. And now I would like to turn to the next session of our panel, which is the panel discussion. First of all, I would like to introduce our panelists in an alphabetical order. So first, Ms. Bofei Hu is Deputy General Manager of the International Business Department at China Construction Bank. She is also a member of the cross-border RMB committee under the China Society for Finance and Banking. She has extensive expertise in international RMB businesses and has had an active role in opening up the Chinese capital market for foreign institutional investors. Secondly, Ms. Danai Kyriakopoulou she is a Chief Economist and Director of Research at the Official Monetary and Financial Institutions Forum, OMFIF. She also serves as the chair of OMFIF's Sustainable Policy Institute. Danai is a frequent speaker and author on topics like monetary and investment policy, financial regulation, and governance. Thirdly, Mr. Sopnendu Moanti. He is a Chief FinTech Officer at the Monetary Authority of Singapore. He is responsible for creating strategies, public infrastructure, and regulatory policies regarding financial technology. As such, he is a well-known FinTech thought leader who is also on the institutional investors list of influential global FinTech deal makers. Finally, but not least, Mr. Changchun Mu. Mr. Mu is a Director General of the Institute of Digital Currency at the People's Bank of China. In this role, he takes the lead in testing the PBOC's central bank digital currency, the digital RMB. As you might know, large-scale asset tests have been underway in China since April. Mr. Mu is also a member of the Committee on Payment and Market Infrastructure, the Financial Stability Board, and the Financial Innovation Network. So I welcome all of the panelists. You can see that we will have a good panel. First of all, I would like to start the discussion with a short presentation from my side, just to raise some of the topics. May I get the presentation? Yeah, here we can see. So starting with the global economic situation, we can see that the current COVID-19 crisis can generate much deeper real economic consequences as the last 2008-2009 financial crisis. If you look at the GDP forecast for the current year, we can realize that. I'm sorry. Yeah, we can realize that if it in 2009, more than half of the countries in the world were able to grow, mainly in Asia. So we know well that in the last decade, the Asian countries and the Asian region led the world economy. If you look at the numbers nowadays, we can realize that more than two-thirds of the total countries in our world will shrink in a recession, and there will be a deep recession in several countries, and only few countries will be able to grow further. For example, China will be able to increase their GDP in 2020. If you look at the differences between the different regions, I think the picture is quite similar to those one we saw in 2009. So it seems to me that the Asian region, the Asian countries will lead the recovery, while the European Union and the GDP growth in the European region will lag behind. So it seems to me that the role of Asian countries within the global economy will increase further in the next decade. It's clear that if we look ahead, it's clear that the COVID-19 is a game changer in our life. So many new changes emerged, and we have to find many new balance in the near future. So we have to find the right balance between the market and the state role in our economic life. We have to find the new megatrend between the globalization and the localization trends. That's the key question nowadays, that the industry or the services sector will lead our economic growth in the next decade. It's clear that the green revolution is coming. So the green revolution will determine our future in the next decade. It's clear that our life is moving into the direction of the digital space. And finally, it's also true that we have to find a new balance between the work and family life. So looking at the new possibility of homework, I think there will be more room to find the right balances between the two. So it's clear that many tectonic changes will occur in the next decade, and we have to find the right answer for that. Regarding the macro policy, I think the answers partially similar to those we saw after the 2008 and 2009 financial crisis. So the central banks started to increase their balance sheets. The central banks are very accommodative in their monetary policy, and in line with that, the fiscal policy started to increase their debt levels to mitigate the non-intended negative consequences of the current COVID-19 situation. It's important for us here in Central Eastern Europe that not only the big central banks started to increase their balance their balance sheets, but also the smaller central banks started to do the same. And it seems to me that it will be the new trend for the coming decade, that the central banks will increase further and further the size of their balance sheets. Finally, some words about the impact of digitalization on the central banking. We can see a tectonic shift regarding the issue of central bank digital currency. You see in the current chart that till the end of last year, the central banks were mainly, I can say, inactive or saw more risk in the central bank digital currency than advantages. But the situation changed in the last year, and nowadays more and more central banks announce that they have an own CBDC project, and they have different pilot projects, and they try to accelerate the whole procedure. So that's the global landscape nowadays. So we can see that there are pilot projects in China, there are pilot projects in Scandinavia, and I think in the near future many further central banks will announce that they try to introduce a new digital currency. So that's our introductory thoughts regarding the panel, and now I would like to turn my questions to our panelists. So I would like to start with the first topic, which is the fundamental changes that shape the economy after the pandemic situation. I would like to ask that how do you think about the current globalization or deglobalization or slow globalization debate? So what will be the new trend after the COVID-19? The globalization or the deglobalization? It's a question for all our panelists, so the first can start.
You want to call out, or just anybody can start?
Yeah.
Well, I think you didn't ask, so I'll just start with saying that I think from the point of view which I have as a fintech officer, I think I have this line which I say, during COVID-19, post-COVID-19, there's a shift from efficiency and productivity to resiliency and sustainability. And that's a clear shift, because one thing COVID-19 has shown, over-reliance on productivity and just-in-time supply chain management and highly efficient trade corridor. There's a need to what we call as find a more expanded supply systems, more decentralized reliance on a single source of supply. I think that's a part of the resiliency which will be brought in. Second thing, which I think very striking, which happened during COVID-19 and it's going to happen more in post-COVID, is the rise of what I call as low-touch and high-tech economy. I think that's a big part of the new design of the financial system and the business system, which will drive a lot of the new construct of kind of players who are going to come and play a more dominant role in this whole journey. The third aspect is definitely one thing we saw from the numbers we saw in Singapore and in Asia, the rise of e-payment. And clearly the retail payments through electronic form is now going to the roof. Almost it has touched the segment which was typically resistance to the whole electronic payment. They have clearly come out and they're part of this whole e-payment growth. And I think that's the broad three areas of shift we are seeing. And more so, what will also happen, I think, in my mind, in the new construct is the debate around data will become far more sharper, because one of the challenges in the global economy, when you are going to rely on a lot of technology and cross-border data flow, is the policies of countries, especially in the large data producing country, what kind of data structures they'll have and infrastructure they'll have to allow a clear flow of data. Countries who will resist data flow will be coming out of the system. Countries will be open to data flow, will be part of this new construct. So policymakers in different countries have to think very hard about how do they manage data and share cross-border, keeping in mind the privacy, the national sovereignty issues and other things. And I think, and beyond that, there will be a distinct shift into the what I call as a focus on the green side, on the sustainability side. More and more products will be designed keeping the climate the sustainability side of the design of services, because there'll be that market expectation in those space. So I'll pause here. I'll let my other panelists reflect on this question.
Okay, thank you very much. Any other thoughts regarding this globalization debate?
Maybe I can jump in. Hi, it's a pleasure to be here. Not so much on the kind of consumer and digitalization aspects of globalization, but on the policy side of globalization. I think what we're seeing in this crisis, because it is a truly global crisis, is that a sustained post-pandemic recovery will require global action. And what we're seeing is that we need a total reset in the kind of policies that we've seen in terms of stocks of debt that are high, greenhouse gases stocks that are high, and also to move more to a more inclusive society with a greater focus on sustainability. This will require a change in the balance between fiscal and monetary policy, but also improving the framework for social and financial and political inclusion to make production more environmentally sustainable. And at the same time, it's also about how do we deal with stocks of debt, which particularly for emerging markets that are very challenged at the time being, will require a global action in terms of the consortium of creditors. That is something that we're already seeing. And I think the pandemic has also reinforced this idea that problems that cross borders require global action. It's not about thinking about one person's health or one country's health. It's global health, it's one health. And I think a lot of other non-financial sources of risk are treated in the same way. We have very different political differences and policy differences in that, but there is a shift towards thinking in more global terms because of the nature of this global shock. So also on the policy level, we are seeing that, notwithstanding the issues that were analyzed already by the colleague from MAS on the payment side, on the retail payments, on the globalization of production and localization of supply chains, but I think also on the policy level.
Okay, thank you very much. Now I would like to turn to the second question, because when the COVID-19 hit our economy in the start of the current year, one of the first reactions from the macro policy was the larger deficit in the fiscal side to mitigate the negative real economic consequences. And we saw where nowadays that in line with that, the debt to GDP ratios increased quite substantially globally. So my question is that are we or should we concerned about the rising debt levels? So is it an issue nowadays, or that will be the new norm? So Ms. Kyriakopoulou, may I raise?
Yes, sure, I can take that one as well. I think debt levels and the absolute level of debt is one way to look at the sustainability of debt, but it's a much more nuanced question. It's not just because levels of debt are higher that means it's unsustainable. We need to see it more holistically. The debt to GDP ratio is one crude measure, and yes, these have been rising, but it is a ratio, and we have to think also about the GDP side of it. So if borrowing more and supporting growth at this stage means that GDP growth will be less severely affected or even positive as a result, then that makes debt more sustainable as well. It's also a question of how debt will be repaid. So it's a big question around inflation. Are we going to be able to achieve that? And that's something that monetary policy makers have struggled with in the past, and I'm sure we will address that in the discussion. It is concerning, especially if we see a deflationary spiral that may make debts unsustainable, but it's also about the policy mix. At this time, given the low borrowing rates and the need for the economy to recover, borrowing more, spending more on the fiscal side is absolutely the right policy, but it is becoming concerning as we rely more and more on these stimulus packages, especially on the monetary side, that has also negative side effects.
Okay, thank you very much. Now I would like to turn another important topic, which is the stability of the banking system. So there are many analyses nowadays which show that the next issue in the coming years can be, after the real economic crisis, the vulnerabilities in our financial sector. So now that's why I would like to raise a question to Ms. Hu. From the perspective of commercial banks, how do you see the post-pandemic changes on the development trend of the world economy? In the post-pandemic area, what do commercial banks do to promote stable and sustainable Eurasian economic and trade relations?
Thank you, Mr. Virag. It's my pleasure. I'm Hu Bofei from China Construction Bank. I would like to talk this question from the commercial bank's perspective. For the banking industry has been facing big changes after the COVID-19. Basically, three big effects, big changes. Number one is the global recovery is likely to be long, to be uneven and uncertain, because almost all the economies have slowed down in terms of economy, and most countries have suffered a severe decline. So the IMF has recently published their forecast that the global economic decline will be 4.4%. So we need to respond to quickly to these epidemic changes, and the recovery of the economy should be a concern as uncertain. And the number two is because of this loose monetary policy, there will be causing an inevitable increase of liquidity, and also leads to the asset price fluctuation. This is also a major concern should banks are facing. And the last one will be, actually, we see industries has experiencing differentiated opportunities after the outbreak. Here we see some of the traditional industries like retails, aviation, and tourism actually have a severe hit and have not yet recovered. But we have seen some of the industries actually they are moving fast, taking the opportunity in this new situation. Those industries are moving towards online business and digital transformation. So for banking itself, commercial banks here in China, we have experienced major changes themselves. Number one is, I think the commercial banks here have reached into a consensus that finance shall service the real economy. The essence of the finance is to serve the real economy. The separation of financial services from the real economy is like the brook without source and a tree without a root. So because of the value of the commercial banks lies in its capability to channel its financial resources to capable entrepreneurs, and efficiently and cheaply. The second change is banks have made a big progress towards digitalization. As I said, the pandemic has already accelerated the progress of banks' digitalization. It has not only found its base for banks' infrastructure and management, but also to reconstruct the entire logic for the banking operation. That is to lower the barrier center of the financial services by serving not only the traditional big clients, but also those SMEs and the rural sectors. For example, during the outbreak, China Construction Bank has continued to offer inclusive loans to SMEs, household businesses, by way of a mobile application. This lending process can be completed in several minutes, and money can be drawn and repaid anytime online. Through this kind of new method, we are able to finance more than 1 trillion yuan to 1 million SMEs. So at a much lower risk and a better efficiency. So the third one is the banks continue to bridge the economic and financial cooperation in the global market, because they have more clients. They want to go connected with foreign markets, to foreign business partners. So, for example, we have doing this global smart matchmaking platform, which is specialized in providing the domestic companies with the foreign companies in trade, investment, and cooperation and other cooperation opportunities. It helps to mitigate the system asymmetry and lower the transaction cost. So the case we are doing quite good is during the outbreak, the platform was used to connect, to provide the connections from China, medical sources, medical supplies with global demand. Just within a short period of time, it has matched over 160 million pieces of various financial medical supplies, medical products to 28 countries and regions. By that kind of practice, it just connected the Chinese companies with the world companies. And also it just a response to your globalization question. Actually, I hold very positive views about globalization. The only thing is how you do it. Maybe in this new era, during the outbreak or post at the post-epidemic era, you have to change into new model, new platform. So let me just stop here and thank you.
Yeah, thank you very much, Ms. Hu. Now I would like to turn to one of our last, but I think one of the most important topic, which is the central bank digital currency. So nowadays there are a lot of rumors that the digital currencies can be the new game changer solutions in case of the central banks in the next decades. So now that's why I would like to turn to Mr. Mu, and I would like to ask that based on your experiences, so what could be a possible turning point when a central bank should consider introducing CBDC? In your opinion, is CBDC a crisis management tool or an instrument that can be useful in a normal business as usual time as well? Mr. Mu, the floor is yours.
Thank you, Governor. It's an honor to be here to join the panel. For this question, my personal view will be, there are several possible turning points for a central bank to consider introducing CBDC or digital fiat currency. For example, if there's the invasion or popularity of private digital crypto assets, that will be a turning point for a CBD for introduction of digital fiat currency, because you have to protect or safeguard the monetary sovereignty of the central bank, and at the same time, because of the popularity of the private digital tokens or the popularity of private crypto assets, you have to guarantee the wider access to central bank money by the general public. So in that case, the central bank should consider the introduction of digital fiat currency. So secondly, when the retail payment system could be run by the private sector, or for example, in China, we have Alipay and WeChat Pay, which have been very popular and became a very significant, important financial infrastructure. In that case, because all the private sectors definitely will have their own life cycle, and there may be possibilities of technical outage of those financial infrastructures. In that case, the central bank have to step up and to step in to introduce digital fiat currency to provide a backup or redundancy to the retail payment system and to guarantee the financial stability. So thirdly, in order to, as I said, in order to improve, when you see there's inefficiency of the central bank payment systems, and we have to guarantee the wider access and the stronger capacity of the whole central bank payment system. In that case, it's also a turning point for the central bank to issue digital fiat currency. And not the last but not least, if there's a lot of population in the country, for example, in China, we have a lot of remote areas and poor areas. Those people in those areas may not be covered by the traditional financial services. So in order to improve the financial inclusion, is also a turning point for the central bank to introduce the digital fiat currency. For the second question, is the digital fiat currency as crisis management tool or instrument that can be useful for in normal business as usual times as well. Definitely, I believe that the CBDC or digital fiat currency definitely is a solution to business as usual times as well as during the normal time. Definitely, as I mentioned, for the four, but not least maybe we have other turning points. All those drivers could encourage all the central banks to introduce digital fiat currency to be useful in a normal time, not only in a crisis time. Of course, during the pandemic era, because of the social distancing, we have to introduce digital payment instruments to facilitate the development of digital economy, especially during the pandemic period. So that's my opinion to your question. Thank you.
Okay, thank you. Thank you very much, Mr. Mu. Just a quick question to you. So what's your preference? A token-based, prepaid but anonymous CBDC, or identifiable account-based system?
Well, personally, I don't have a preference between the two, because in our experience, in our development R&D process, we don't use the binary system for the digital tokens or digital payment instruments as token-based or account-based. Our practice actually covered 3 categories of digital currency or digital fiat currency. Those are the token-based or account-based and quasi-account-based. So there are actually 3 categories. Personally, we don't have a preference. We don't have a preference among those 3 categories. Either of them could be used in our practice, in our ECNY system. So the token-based could be used in the dual offline use cases. The account-based could be used in the online use cases and also stronger KYC use cases. And the quasi-account-based could be used for the foreign tourists who come to China for a short time period. And 3 of them, all will be available in our digital fiat currency development and usage and use cases. Thank you.
Okay, thank you very much, Mr. Mu. So now I would like to turn to Mr. Mohanty. So can there be a preferential sequence regarding the introduction of different types of CBDC? Shall we start with cash-like liability only, or a wholesale, or SME-focused types of CBDC? So that's my question to you.
Sure. I think that's I just want to add what Mu Chanchun just now said. I think I'm just thinking loud, given we as an innovator, we always believe something is possible. Maybe the same currency can be account-based, also offline-based. If the systems are off, they can become offline, and they can have some restriction, because at the end of the day, these are all programs. And you can design the programs into this token to operate based on whether they're online or offline. So I also believe there's a third option, which is both are encoded to the same token. And back to your question around preference, I think from Singapore perspective, we started, I saw that your presentation, it was showing this different CBDC, the wholesale, retail, and it shows the positive news and the negative articles. And I don't know whether you know, Governor, that we were the first central bank who started thinking about the role of wholesale CBDC in this new world of digital currency. And the reason why we thought that is important, because in Singapore, because we are a highly banked country, there was no real need for a retail CBDC, because today in Singapore is almost 95% plus bank population. And today I can move money from A account to B account with 3 clicks, 0 cost. There's no real use case for a retail CBDC. But we had a clear need for a wholesale CBDC, because wholesale CBDC focus is primarily operating efficiency. It helps to solve a long-standing problem where interbank settlement can be resolved by using wholesale CBDC, especially if you are doing cross-border transfers. Typically in a cross-border, there are 3 things to think about, and that's, and again, COVID-19 and all this demand for a bit more cross-border connectivity, where domestic payment systems are going to get connected. We have not solved one of the 3 problems. The first one, we have, I think, largely countries have solved, is the consumer experience of paying somebody overseas. Second, with the technology available to us, we can do a lot of online screening for AML and KYC. The third most difficult problem, which has not been solved largely, is the settlement when you do a cross-border transfers. where I believe wholesale CBDC will come in big help, because then different central bank can open the ledgers where a wholesale CBDC can be the instrument for settlement, and that can help the whole cross-border transfer becoming cheaper, faster, safer, and far more efficient than it stands today. So wholesale CBDC is definitely something we believe strongly will have the first multiple country cross-border production grade utilization. And your questions around SME, I guess you're asking about in the context of cross-border. Yes, in the context of cross-border, definitely wholesale CBD is a big part of that puzzle. Now, I'm also thinking from an innovation perspective. Think about today for an SME at an abstract level, there are two processes. There's one process which you move a good from a buyer to a supplier. There's the other process, once that trade is done, you move money from A account to B account. These are two distinct, different processes. Wholesale CBDC gives us an opportunity to make it as a one transaction, where using smart contract, you can make a single transaction where the money is embedded in the trade, and the whole process becomes far more efficient, far more safe, and the whole collateral risk goes away. So this is an innovation opportunity where wholesale CBDC can make this double transaction to a single transaction using a smart contract. So that's where I think the end state efficiency and opportunity lies in this space, Governor.
Mr. Mohanty, thank you very much for your talk. So now we are getting closer and closer to the end of our panel. So I have a last question to all of our panelists. So it seems to me that nowadays there is I can say, global competition regarding the CBDC. So who will be the first central bank who will be able to introduce the first fully fledged digital currency in our daily life. So my question is, when the first issuance of digital currency can occur in the future, within 1 year, within 5 years, within a decade. So I would like to start to answer this question in alphabetical order. So I would like to take the floor first to Ms. Hu.
So you're talking how long will be the digital currency? I think we have already experienced some kind of digital currency in China. I think it's one thing is because we have already a very developed online payment system, and then we have this digital currency. We have, as Mr. Zhou introduced, in four cities, and my bank is also involved in this. I think for the individual peoples are very quick to accept this, and many of them very actively take part in this. And it's quite, the concept or the usage is quite similar to what we have already widely accepted in the digital payment. So I think it's a not long time perspective. I would expect it to be more soon, as it's just a connected future. Thank you.
Okay, thank you very much. Now I'm turned to Ms. Kyriakopoulou. So how do you see this timing issue, especially here in Europe? Ms. Kyriakopoulou? The floor is yours.
Hi, sorry, I thought my video froze. Well, I think in terms of where we are in the issuance of CBDCs, the use of retail CBDCs is imminent in China, and I think our Digital Monetary Institute at OMFIP has done several studies on this in Cambodia. It's probably likely to follow suit in the next year or so. That when we talk about a truly international synthetic hegemonic currency, for example, because there has also been discussion around this, I think we're still some way off. We're still kind of quite far apart in terms of the preparation for coordinating regulation around financial services in general, let alone a digital currency. And I think there's also different discussions when we talk about wholesale CBDC and retail CBDC. We heard from the MAS earlier about the Project Ubin, and also in Canada we had Project Jasper that has been quite advanced in that. But in terms of the retail space, I think in the next year or so we're seeing that in China and Cambodia as well. In the euro area, there has been some progress in some central banks. For example, the Dutch National Bank is quite advanced in that, but because it is within the euro system, it's something that can still take quite some time. And also in Sweden as well, which is quite advanced in its work on that.
Thank you very much. Now I'm turning to Mr. Mohanty.
I think the first thing we must record as history that the country which has already issued a retail CBDC is Cambodia. I think history should always acknowledge them. They are the first country who have issued real CBDC at the retail level for population. So that's the history. You cannot take away any new country. So they're the first country who has done it in production, and we truly acknowledge. And the reason I think I always take Cambodia as an example, because they have shown two things. They have shown that the retail CBDC allows you to leapfrog your RTGS system, an expensive RTGS system for small countries who may be economically challenged to build expensive retail payment system. So retail CBDC is a great example for them to leapfrog and do something meaningful there. I think your question around wholesale CBDC, yes, that will come next year, and it can get earlier, my prediction is.
Thank you very much. And the final remarks from Mr. Mu.
Thank you, Governor. Yes, I agree with other panelists, and several countries have already started their issuance of digital fiat currency, or CBDC. So I could see the trend have already left the platform. We in China, we also have already started our pilot, but it's not formally issuance of digital fiat currency for Chinese in the Chinese jurisdiction. We have, as Dennis has already said, we have to be prepared in terms of technical aspects, and also we have to be prepared in terms of the legal environment and legal system. So before the full preparation of that, I think we cannot run before we can walk. Thank you.
So thank you very much. I would like to thank your time and your excellent and quite useful thoughts regarding the current challenges in our world. And of course, I would like to thank the attention to our audience. I hope that in the next year we will be able to meet personally here in Budapest. Thank you very much.
Thank you.
Thank you.
Thank you.
Thank you, Deputy Governor, for guiding us through the session. And I also would like to thank all the participants for their valuable insights.